prices that manufacturers can charge their own customers. That's particularly good news because during the crisis, this was nearly impossible to charge clients higher prices.
All right, Conrad, let's look at what's happening in your debt market vis-a-vis the equities market. Now, the German bonds are showing a record yield spread, racing alongside the stock market. Is there a warning here that equities rally is almost done?
Yes, some analysts see it that way. They look back in the past, take historical data and try to, read from this data what the future of the market looks like. Of course, that's a bit dangerous given that we've seen extraordinary factors driving the markets for many years now, namely the super loose monetary policy by the central banks. So I would say we should take indicators like this with a grain of salt. But yes, you're right, the spread between yields on government bonds here in Germany and in the United States is seen as an indicator for the equity markets, especially in the United States, and the fact that this super wide spread has narrowed somewhat lately is seen by some analysts as a potential sign that the bull market in New York has entered its late stages. We of course have to wait and see whether this becomes a reality.
Now, starting the new trading month and week today, Eurozone stocks are in green, but the euro in sharp decline. What's driving these two markets in opposite directions?
Well, both is a bit of a rebound, really, to what's happened on those markets last week. Remember, Mario Draghi, the ECB chief, started saying things that some people on the markets believe could be read as signs that eventually, and not in the far distant future, we have to get prepared for higher interest rates. That caused the euro last week to climb by 2 US cents to above $1.14. And the DAX, the German share index here, lost around about 3% in the course of the last trading week. Now, of course, over the weekend, investors had time to think again. And, they realized that we are only about to start discussing higher interest rates. It will be a while until really we see higher interest rates here in the Eurozone. And that caused this rebound now on those two markets. The euro is slightly lower. The DAX is heading to the upside.
All right, Conrad, I'm sure there's a lot to look out for the rest of the week. Let's just keep a tab on them. For now, I'll let you go. Thank you for being part of this program today. I will move on now to the U.S., where the stock index futures pointed to a higher open today as investors prepared for the first trading week of the second half of the 2017. Investors will only have 3 full trading days to digest a slew of economic data this week. The stock market closes at 1 p.m. today and will not open on Tuesday because of the 4th of July, a holiday. On Monday, we'll see the release of manufacturing PMI data for June at around 9:45 a.m. Eastern Time. ISM manufacturing for June and the construction spending for May are scheduled 15 minutes later, while light vehicle sales for June is also expected to be released throughout the day. The numbers are showing green. Dow Jones Industrial Average 0.30%, S&P 500 futures 0.29%, and Nasdaq up 0.23%. In Asia, markets there closed mostly higher today as markets digested the Kagzim PMI data out of China and the Bank of Japan's quarterly Tankan survey. Japan's Nikkei 225 rose 0.11%, South Korea's Kospi advanced 0.11%, a tad below the 2,400 level. Australia's ASX 200 declined 0.65% to finish the session at 5,684.5. Markets in Greater China traded slightly higher. Hong Kong's Hang Seng Index was up by 0.1%. The Shanghai Composite rose 0.07% and the Shenzhen Composite gained 0.39%. Right back here in Nigeria, it's also the first trading day for the fixed income market. Let's bring in now Dayo Ndiane, for fixed income dealer with Access Bank, to tell us how the market has started the new week and, of course, the new quarter. Good afternoon, Dio. Thank you very much for coming through to us.
Hi, good afternoon.
Right. It's a new trading week and, of course, the first trading session in the month. What is the sentiment like in the market today?
Okay, opening today, market was more on the bullish side. We saw buying on the short and medium-term bills. But with the notification of SMIS and OMO today, we saw a reversal in market trend, more of sell-off on this same short-term bills. So right about now, it's about 16-17% level on the July-August bills and about 18% for the September bills.
Now we've seen
for the bond market.
Go ahead, Dio.
For the bond market, we've seen more of buying, which are client-driven. So we've seen more of the pension funds buying some bonds to their position, but we don't see a lot going on right now.
Right, we saw the PMI report released by the central bank today. Is the market monitoring this data? Is it reacting in any way, to this data that was released today?
We're seeing no reaction to that for now, but probably by tomorrow, when markets have really decided what direction they want to go as regards that, then we'll see the reactions tomorrow.
All right. Thank you very much, Dio Ndiane, for your time. We'll take a quick break. When we return, the program continues. To stay with us.